What's up, everyone? Have you guys heard of poison ivy? No, not the plant, but analyst Ivy Zelman, who predicted the housing bubble back in 2005 when no one else was talking about it. She proved to be right, as we all now know looking back. Today, we're going to take a look at an article written by Lambert for Fortune, where he talks about Ivy Zelman's predictions for the housing market right now and heading into 2023 and 2024. She was right back then, so I think it's worth taking a look at her opinion of what she thinks is going to happen with the future of home prices now and heading into the future. So let's just dive right in. When Toll Brothers CEO Bob Toll tried to say that the housing market had bottomed out in 2006, Zelman famously quipped back, "Which Kool-Aid are you drinking? Because I want some." As we now know, Zelman's housing bust fears proved more than correct as we plunged into a housing recession in 2008 that lasted several years until we turned the corner. The housing bulls labeled her poison ivy after she said the housing bubble was at its peak in 2005. She almost lost her Wall Street job because of it and created her own company, Zelman and Associates. She continued to forecast a declining market, noting the crash in 2008, and declared the bottom of the housing market in January of 2012. After that, she was bullish on housing up until last year. Back in February, Ivy Zelman said we were at the peak of the pandemic housing boom. And if you recall, it was right around then that the Fed Reserve stepped in and mortgage rates started to go up drastically, which caused the housing market to immediately start to cool down and correct. Fast forward to right now, and Zelman has some strong opinions about the future of the housing market. Lambert talks about Zelman's bearish assessment of U.S. home prices when she was on the Macro Hive Conversations podcast on July 22nd of this year. Zelman says, "So right now we're getting a backlash of the change in direction from free money to now the rise in mortgage rates and inflation. So the market is poised for a fairly significant price correction, and we're already seeing signs of that over the last several months. Inventories in certain markets, mostly on the West Coast, Southwest, and Mountain States, are rising at max speed." Zelman's forecast model predicts that in 2023, U.S. home prices will fall 4%. Then in 2024, she predicts another 5% drop. As fast as inventory levels are rising and demand is plummeting, we could see pretty substantial home price corrections. But it's going to vary market by market, Zelman says. "I don't think this will just end quickly. This is going to be a very pressured market nationally in 2023 and 2024. Take a look at this chart provided by Lambert and Fortune. You can see where he put Ivy Zelman's forecast by the red lines all the way to 2024. Zelman's outlook amounts to an 8.8% drop in U.S. home prices between 2022 and 2024. We haven't seen a drop in home prices like that since 2008 through 2012, and before that, back in 1992, where the dip doesn't even look like it was nearly that bad. Let's compare it to Corelogic's graph published on September 6th of 2022, which shows a comparison of the national year-over-year percent change for the Corelogic HPI and Corelogic Case-Shiller Index from 2000 to present month, which forecasts 1 year into the future that was provided by Moody's Analytics. So you can see that the blue line shows home prices going up since 2020 until this year when it starts to go down. The light blue line is their forecast in the future into 2023, which hasn't been this low since 2012. Corelogic is now predicting home price appreciation slowing to 3.8% by July of 2023. Selma Hepp, the deputy chief economist for Corelogic, says, "Following June's surge in mortgage rates and the resulting dampening effect on housing demand, price growth is taking a decisive turn. And even though annual price growth remains in double digits, the month-over-month decline suggests further deceleration on the horizon. The higher cost of homeownership has clearly eroded all affordability as inflation-adjusted monthly mortgage expenses are now even higher than they were at their former peak in 2006. So their forecast has been declining month over month, but Corelogic still has prices appreciating 3.8% year over year. And as reported in my video a few weeks ago, Zillow's outlook for home prices has been revised down significantly to 2.4% home value growth of July of 2023. As for Fannie Mae, Freddie Mac, the Mortgage Bankers Association, and Goldman Sachs, they are all still predicting low single-digit home price appreciation for 2023. So prices may not go up a lot, but they are still expecting some price appreciation. But back to Zelman. Lambert writes in Fortune, if Zelman predictions holds true, Fortune would have to shift our branding from the pandemic housing boom, a period that saw U.S. home prices soar 43% in just over 3 years, to the pandemic housing bubble. Lambert does explain that this forecasted drop is still more of a housing correction than a housing crash, something that the industry says requires a 20% price drop. Between 2006 and 2012, home prices fell around 27%, just to give you some context. And Zelman isn't the only one predicting prices to decline in the next few years. Moody's Analytics expects U.S. home prices to decline from 0 to 5% nationally. If a recession hits, then Moody's forecast moves to 5% to 10% respectively. And several weeks ago, Fitch Ratings came out with a forecast of prices falling between 10 and 15% if the housing market continues to get worse. Now, as I always say, real estate is very localized. So what's happening in one part of the country is not necessarily what's happening in another part. Housing markets that became overvalued in the last 2 years will most likely see the more significant price drops. According to Moody's Analytics, these include markets like Boise, which is overvalued by 72%, Charlotte, overvalued by 66%, and Austin, overvalued by 61%. The vast majority of these significantly overvalued markets are concentrated in boom towns in the Mountain West and Sunbelt that benefited from the pandemic's work-from-home trend. Take a look at this map, which shows the 180 markets Mark Zandi, the chief economist for Moody's Analytics, believes are overvalued by more than 25% and will see home prices decline by 10 to 15%. If a recession hits, Moody's Analytics expects those 183 significantly overvalued regional housing markets to decline by 15 to 20%. Mark Zandi tells Fortune that factors including record low vacancy, very good underwriting, and plain vanilla lending won't be enough to prevent a single-digit drop in home prices. However, it will prevent the U.S. housing market from slipping into a full-blown housing crash. This time around, Zandi says, homeowners are in a much better financial shape. I agree with him that homeowners are in much better financial shape now than they were back in 2008. We just don't have the same subprime interest-only loans that were omnipresent back in 2008 that caused a lot of people to be underwater in their house because they just couldn't afford the increased payments after the initial 2 or 3 year interest-only payments expired. And the huge influx of inventory arising from short sales and foreclosures that all came on the market at one time, home values just went down significantly and more people were unable to afford living in their homes. Today, homeowners have had to adhere to a much stricter loan criteria to get a loan, and as a result, they're more able to weather the storm of a correction in home values. And also, if some of these industry insiders are correct and home prices appreciate even a little over the next few years, then more people should be okay. What worries me is those people that bought in the last 2 years that may have bit off more than they could chew, as the saying goes. I hope they're okay, because there is no doubt that home prices have started to correct in the last 6 months. How much just depends on where you live. Here in the DC area, if a house is in a good location and is priced appropriately, meaning for today's market, and is in good condition, it still will sell very quickly and most likely with multiple offers. It is more important than ever to work with a professional and price your home according to what's happening in today's market, not to price it in according to recent comps in the last year. If you price your house according to recent sold prices in the last 2 years, you are most likely going to overprice your house and have to eventually reduce the price until you get it sold. But what's happening where you live? Are you still seeing multiple offers, or are you only seeing price reductions? Are you seeing more inventory come on the market? Let us know and comment below and tell us where you live. I think that's the best way for us all all to get a pulse on what's happening in real time right now in the housing market as we enter the fourth quarter of 2022. If you got some value out of today's video, you may want to watch these two videos on the housing market forecast. They come from different industry insiders, so it gives you different opinions of what people think is going to happen now and in the future. Thanks for watching. I do appreciate it.